August 1st, 2024. This is the S&P 500 E futures mini on the 2000 tick chart using NinjaTrader 8. This is a pretty impressive sell-off today. It was a 150 point move today. So the highs, which occurred in the regular trading hours, was 56. Well, so you can see it up here, 5,675. And then it went all the way down to the low of 54.4475. So that is a 150 6 point move. That is quite impressive. What's more amazing is this move engulfed the huge 100 point move from yesterday. So this is where it opened. It engulfed and took back all this buying pressure all the way down here to 44. So right here, it took this entire move back today. That is crazy. The other observation I want to make is today actually after sitting through all these trades, because if you actually take a measurement from for just regular trading hours from market open, say about right here, all the way to market close, so it's about 6.5 hours of trading, that's 869 candles. Now, on a 1 minute chart, 1 minute chart, 60 minutes per hour, 6 hours, 6.5 hours, that's already 360 bars plus another 30 minutes. So that's like a 390 bars. So let's just round up to 400. There was 2 times as many candles today on the 2000 tick chart than on a 1 minute chart. So it was mentally exhausting. I got to say, after watching all these candles form, it was really tiring. And even though the market, after a while, you clearly see it moving down, it was a lot of drawing and redrawing because it was hard for me, at least, to find a reliable channel to trade and kind of have a bounce off of. I eventually found these guys, but there was also a lot of short and trend channels, a lot of consolidation areas, and it was just really mentally exhausting. And then also the candles themselves, there was so much trading, so much volume today, first day of the month, that candles themselves were quite large. If you look at this R value, that's the size of the candles. I'm just going to scroll through. A lot of them were like 3 to 4 points in size. So that increases your risk and made risk management harder if you wanted to take a trade. Also, I want to say there were a few setups in here that I call hunch trades, trades that I thought, I wanted to take, but they didn't really follow the rules. They weren't quite second entries. Sometimes they were third entries, or the context just looked, you know, like it would go in the direction I was assuming. Most of the time it was short, but I ended up not taking them because I wanted to hold firm to the rules. But I think with more experience and seeing more of those type of setups, I'll probably feel more confident going ahead and taking those trades. There were a lot of setups today and a lot of setups that were almost there that I didn't mark, but I kind of marked with black arrows. I'll just talk about those. There was only, I guess, 2 pieces of economic data that came out. One was at 5:30 Pacific Standard, which is about right here where my cursor is. I guess roughly right here. It was the unemployment claims. And then the second thing was at 7 o'clock, which is right here. This is the ISM manufacturing PMI. But I don't necessarily think those two affected the market all that much. But then there's just this huge sell-off that I saw in kind of like 2 to 3 legs, even four, like one leg, then it got a little more shallow, two-legged correction, another leg here, and then another leg, and it bounced. And it kind of closed near the lows. So it was quite an impressive day how much selling there was going on. It was definitely not a day to go long. So any trades you took, as long as you were short, you had a pretty good chance of surviving. So I'm going to go into the actual setups and not go bar by bar just because there's just so much going on today. This is how I drew the pre-market. There was this big orange up channel, another push up. I did see a second entry long here, but it's in the pre-market, so I wouldn't have traded it. Well, actually, I didn't trade it. It kind of confirmed. So at this point, before the market even opens, I'm thinking there's going to be a range day to kind of compensate for this huge, huge rally that happened yesterday. And it looks like it was kind of consolidated toward the end. So I expected just a continuation consolidation. Little did I know it's going to sell off so strong. So the first setup that I saw was actually in the pre-market, as I said, is like a new high, first entry long right here, pullback, second entry long. So kind of a decent setup. If this had happened in the regular trading hours, I might have considered it because EMA is starting to show some support. It's one of the lower risk candles of the day because it's only 2 points. As you're going to see throughout the day, there's other setups, but the candles are just too large, so it made risk management a little bit tougher. So on the open, I thought it was first moving up this green channel, and I thought I saw this failed second entry short. Technically, it's a new low here. A first entry short. You have a second entry short right here, but I counted this as one move. So first leg up, pull back, second leg up, second entry short failure on this candle, but there's no trade here. Plus, this is a 3 point candle. And then the first trade I actually took was right here. It's a higher low right here. The way I had it was I had this green up channel drawn like this. So there's already a break, but not a clean break and not a close outside and a push up. So I thought it's bouncing off this green up channel that there would be enough room for me to get a quick scalp. This yellow up channel doesn't exist yet, so I wasn't worried about hitting a potential resistance yet. I was thinking maybe there's a localized high, but I was thinking it went to the bottom of this. Well, it didn't really quite go to the bottom of this range, but then two legs back, I'm thinking one, two, maybe another push up to at least get a quick scalp. I will admit it's not the best trade, and I definitely probably should have skipped it, and I was lucky that I actually got out with a profit. So then prices continue moving, and that's where I established this yellow up channel. And this yellow up channel has this new low, it has 3 confirmations. When a first entry short pullback, second entry short, in real time, I saw it like this, and I thought this is bouncing off the EMA. It engulfed this previous candle. I think this is a possible trade. If this yellow up channel has just started to develop, I did think it was more valid. Kind of found it a little earlier because it had one touch, two touch at this point, and you can kind of match the other side. So I thought there was a possible trade here, but this is also a 3 point candle, so already your risk is high. It's going to kind of be like that throughout the whole day. Prices move up, it breaks out and it hits this consolidation area, flushes down. I found this lower high. I thought this was an almost trade because it's a yellow yellow up channel. Now the break of this yellow up channel already had an overshoot, and instead of reacting strongly back to this side, it consolidated. So I wasn't that worried when I saw this that prices were necessarily going to move back into this yellow up channel. So I just kind of then when this candle occurred, it went one tick up. Well, actually, uh, two ticks up, then flushed down. It didn't really move past the halfway point, and I call it an almost trade because I needed, even though this orange down channel is going to test the low, I needed it's a decent signal bar. I needed a touch rejection off the EMA to feel a little more confident, or at least this bar to be a little bit bigger. But this was one of the smaller bars of the day. It's only 1.75 points. So I thought maybe it would have been a possible trade, but it just kind of fell short. It felt a little tight. Prices then continue moving. It kind of creates, there's like a second entry long here. It's a break of this green up channel, first entry long, second entry long. It's kind of in the middle of nowhere. You could maybe argue for a triple test, but you already had a failed breakout here. Just wasn't too keen on this. Made two legs up, kind of reversed. Made another push up on this orange up channel. And it starts flushing down on this yellow down channel. But this is also right around 7 o'clock hour where the ISM manufacturing PMI came out. So I don't want to get caught in any kind of weird whiplash here. Looked like it happened right here. It's exactly 7 o'clock and 9 seconds. It sold off, bounced, did a bunch of things. And this is a really large candle. This is 8 points. So that you could easily just kind of create a lot of losses, a lot of slippage. Moves down on this yellow down channel. It hits the bottom, breaks, hits the EMA. So I'm thinking, okay, the EMA is starting to show some kind of resistance because it has this bearish bias coming down. At the time, I was still thinking trading range because it like made one attempt up, pull back, second attempt up. Now it looks like it wants to come back to the bottom of this range and then maybe just continue the day in this range. Little did I know it was going to move from here 150 points down. So it came up. There's no setup here. You technically have like a second entry long here. You have a bunch of these all day, a lot of second entries off of potentially key entry points, but they were either the wrong color or the signal bar was kind of large. And also, just because there was so much volume today, these candles were not only large, it was difficult to find clean channels. So I ended up playing a lot of these shortened trend channels, and then these bigger ones kind of show up a little bit later to the point that they don't actually help too much in my trading, at least for today, because in order for this to establish, you have a lot of chop and it finally hits it or it finally moves down. Because this green down channel actually doesn't exist yet. I do have this orange down channel. It floats down, it hits this consolidation area, and I think I see another possible trade because I'm thinking I'm in a trading range by this time. If not a trading range, at least there's some kind of resistance. So I saw this as a new low. It's break of this orange down channel. It's an overshoot. It broke out to the other side, made kind of one attempt down to test the lows potentially, and maybe a second attempt down, but there's also more of a triple test. Couldn't quite break above. And at this time, I did have this as drawn as a trend line, not necessarily a channel yet, because I didn't really trust this side yet, but it was one touch, two touch, three touch, and I thought this was a possible trade. It's a break of this orange down channel. Maybe it wants to hit and test the lows. It's hitting some kind of resistance, and it's hitting a third touch here. Did close below the EMA, even though the EMA is flattening out. Its history is showing a bearish bias. So I'm thinking, even though it looks like it's flattening, it could still keep turning down. And if I'm in a range, there's plenty of room to this low as well as this low, at least enough for a scalp. The thing is, this is an inside bar, so I did want to wait for a lower high confirmation. And you don't get that lower high and it breaks down through the other side. So this is kind of like a missed opportunity. You had to be a little more aggressive. It floats down on this yellow down channel, breaks up, and now it confirms this green down channel that I have because I have one touch, two touch, three touch, four touch. I really like this. And then I established the other side to be about roughly here, even though it never quite came to the bottom. It's still pressing and it has a very strong bearish bias. Technically, you have a second entry long here, but it's a bad signal bar. And you're just kind of already at the lows and you have a clearly bearish bias. For me to take a long entry, I need to see a higher low, but you don't really quite get that. This is a failed second entry long, second entry short. So I see a new high here, localized new high. First entry long pullback. You have a second entry long here. And I was also hunting around. I saw this as a new low, clearly the low of the day at that point. First entry short, pull back. It creates and confirms a second entry short right here. It's the break of this green down channel. So after this break, I'm thinking prices want to move back into here probably, but it was riding along the top of this resistance. And finally, when it broke through, I thought, okay, maybe there's a trade here. The thing I didn't like was this is a 4.54. This is a 20, 16, 17, 18 tick candle. So that already felt very risky because my stop would have to be at least one tick above. And either I have to enter, way up here and hope it picks me up and continues down, or, if I enter here, I'm taking a really big risk. And if I did try to enter, one tick above here, it's hard to say whether I would have gotten filled on this candle. So you see a lot of these today where the signal bar or the entry bar that you want to get in on is really large, like 2, 3, 4, even 5 points. And it just felt, wow, it's really dicey to try to jump in on those type of trades. Prices then continue moving down. Okay, so it's kind of hovering on the line of this green down channel. So I drew this orange channel, which I found. There's no clean entries. And I do know that if it's a strong trend like this, if you can find a decent signal bar, maybe you want to enter on it, as long as you have enough room to get out. And it's debatable on some of these, like would I have enough room? Because this could be argued as a touch rejection. Do I have enough room to quickly scalp out? Maybe, maybe not, but this is the low of the day. And at this point, you don't know that it's going to move so much more. So you just have to be a little more cautious. Breaks out to the low side, comes back up, hits this consolidation area again. Technically, you have a second entry long here because it's a new high. Break of this green up channel, test the high, first entry long, second entry long. Again, this is a 4.16 tick candle, and that just feels, risky. I do get a triple test here. I thought this triple test is a potential trade because it is the top of the range. The signal bar, I like that it ticked above and then flushed down. This red down channel doesn't exist yet. I didn't see it. I didn't find it till later. But you do have this really strong push. The thing I didn't quite like about this and called it an almost trade is in order for me to want to take this trade, I need to see the entry candle, which is this guy, break below this guy at least by one tick. And if it doesn't break below, then I need the close to give me another piece of assurance. It needs to close at the bottom. But since it didn't, it went down, and as you can see, it rallied back a little bit. So it's a little ambiguous. It shows that this could, still have some buying pressure. So that gave me pause. I called it an almost trade. Turns out it would have worked, but unfortunately, I wasn't on that. Then the price action continues moving down, bounces. It gets a little choppy, pretty noisy, and you get to see how much price action is already gone. And this is only the first hour and a half. It's only been 90 minutes, and you already have all this price action happening. So it was pretty crazy today. So it consolidates again. I see another triple test. Kind of go in a little bit. Okay, so you see another triple test, and I thought this is a possible trade because it had one touch, a breakout, second touch, third touch, a fourth touch. Plus, the signal bar is one of the smaller ones for the day. There's only about 7 ticks. It is a decently strong close, and even though it closed right at the EMA is showing resistance. So it's showing that it's keeping prices down. There's been some violations, but if you look at the past history, the bias of the EMA is clearly bearish. So this is a potential trade that I thought because it's at the lows of the trading range, potentially another flush down. Then it breaks out. At one time, I thought maybe the trading range is higher because I had a one touch, two touch, potential triple test here, but there was no clean setup. Then it pushes up to here, and I thought, okay, maybe the top of the trading range could be here. So that's why there's this magenta or purple type of trading range here. Technically, you have a new low here, first entry short, second entry short. You could argue this is measured move up, second entry short, fail breakout. But the way I saw it is not quite a triple test because I grouped this as one test. You could stretch and say maybe there's one touch, however many you want to count here, 4 maybe, and then this would be multiple tests and a break. But I counted this as a one localized touch because I need a little more daylight between here and the second touch. So I didn't quite have a triple test. I do have a failed breakout. It did make the measured move, so maybe there's a trade here, but I just didn't. I didn't take it. Then prices continue moving. It looks like it's floating inside this range again. Oops. Okay, at this point, I do establish my red down channel because it's clearly broken out of this green channel, and there is another slight leg going down. And I played with a bunch of them and eventually ended up with this red one because I had one touch, two touch, maybe not a touch here, 3, 4, 5 touches. So it fit pretty well, 2 touches at the bottom. So I trust setups going short. Also on a bearish day, I trust short trades more. And it looked like it has another rejection. So I'm looking for reasons to go short as long as it's not pressing against the low of the day. I don't see any cleared setups yet. And it just keeps making lower lows every time and new lows of the day. It breaks through. It looked like it kind of follows on this orange down channel. This is a setup. So this is kind of like a setup that I saw, but I wasn't sure about it because I saw it's one touch, two touch, 3, 4. It fit really nicely at the bottom. I technically have a new low. It's a first entry short, pull back. You have a confirmed second entry short here. Second entry short with enough room for a scalp. Now this is a little risky because you're going to press down to the bottom, but the way things have been going, I had a hunch. I thought it would have worked, but it didn't quite look clean enough. So I left it alone. Lo and behold, it presses down further, pushes down, it reverses back up. It hits and confirms the bottom of this red channel. So now it touches the top of this. So I'm expecting a rejection. There was a potential resistance here. It looked like it's one touch, two touch, 3, or one touch, two touch, a third touch. So I'm expecting a potential touch rejection and a push back down. It does push back down. And then I do see this setup, which I thought is, strangely enough, an almost trade, because I think the trade would have been here. I don't know that I would have entered here. I would have watched this close, then I probably would have waited. But then you do see a lower high potential, you do see a triple test or multiple test, and you do see a localized new low, first entry short pullback, second entry short that's confirmed. So it is touching and bouncing off the red down channel, has these two other key entry points. This is a decent close, but I was unsure of this yellow up channel because I also found this one touch, two touch, three touch. This is a fourth touch. It also fit nicely on this side. So I could make an argument to go short as well as to go long because it could be one push up, pull back, bounce, and then push up. So if I went short, I think I would have gotten stopped out. If I went long, there's no real good reason to go long because I don't see a second entry long yet. So it was a little ambiguous. So I left it alone, called it an almost trade, and it worked out with the key entry points that I had because there was no real clean setup for a second entry long. So it was more reasons to go short against the potential of this yellow up channel being correct. But I wasn't too clear on it at the time, so I had to skip it. When prices continue, it hits this resistance, but it pushes up. This is another setup that I saw. So as you technically have a new high, first entry long, push back down. You have a second entry long confirmed here, and this is a higher low. It moved one tick, engulfed this candle, and pushed all the way through. So the problem with this setup, well, not the problem, but the thing that made me concerned was in order for me to trust that it was a higher low, I needed to wait even after the engulfing for this to close. And by the time it closed, this is a gigantic candle. So my stop would have to be down here. It'd almost be like a 4.25 point stop just to ensure on this trade. And it was this orange down channel. It broke through, and you would think because it made two legs up, this orange down channel might want to test its low. So it was a little ambiguous. I had to leave it alone. Prices then continue moving. So this is where I also saw another setup here, a possible trade. You do have a new high. You don't get a first entry long till all the way down here. Then it pushes back. You technically have a second entry long here. There is also a potential triple test, second entry long, and it broke this yellow down channel, tested low, so you're thinking the downtrend may have played out. The thing that kind of gave me pause, it is a little counter trend trading, and this candle also is a 3-point candle, so a lot of these candles were pretty large, but there is enough room to the EMA. So if you want to enter this, it'd be a little more aggressive. I wanted to wait for a higher low confirmation that never came. Then prices started to move down. It looked like it fit well on this purple down channel. The next setup I saw was after the break of this purple down channel, it falls into this trading range. There is a one attempt up, maybe a second attempt and a third attempt. So it's like a failed breakout triple test. The failed breakout triple test, I did take this trade. So this is near the lows. Clearly I'm ranging. I also saw it as a new low, first entry short pullback. Didn't mean to move that. Second entry short. But when I saw the second entry short, I wanted to make sure after this break of this, excuse me, not this break, I wanted to make sure after these two legs up that this was a confirmed second entry short. So it confirmed first entry short, second entry short, potential fail breakout, triple test. I needed this candle to close. And so when it closed, it did close below this and it did flush through slightly lower. So I entered at the lows of this candle with knowing that there's enough room to this low and ideally all the way down to here. Was able to quickly get the scalp out. And if you waited for 2 points or more, you would have probably gotten it. I wasn't confident that it was going to make it all the way down here yet, but it eventually does. So depending on how you took the trade, you probably could have gotten more points out of it. Breaks down, it falls down this orange down channel. This is another setup that I saw. It's not really a second entry, but I saw it as a new low, first entry short, second entry short, technically a third entry short. When I saw this, I wanted to take this trade, but it doesn't follow the rules because I had this orange down channel established, or at least the resistance part. It looked a little bit iffy. If this had closed on the lows, I don't think I would have hesitated. I probably would have jumped on it. It does have two key entry points, the yellow down channel and the EMA. The thing that gives me pause, or the reason I didn't take it, is it doesn't quite follow the rules. Even if you look at a slightly different time scale, it's still just one leg pullback, second leg. So technically it's a third leg. You'd have to count this whole thing as one leg, which washes out this clear pullback. So one leg pullback, second leg. And I didn't really want to do that, so I had to leave it alone. But as soon as it flushed down, I did definitely have FOMO, but it's something I'll have to just chalk up to experience and have to see these more often. Again, if this had closed more bearish, I don't think I would have hesitated. I probably would have jumped on it because it's a clearly bearish day at this point. The prices continue moving. There's no clean second entries or safe ones that I could see. I was thinking maybe there's a trade here because you have a new low, first entry short pullback, second entry short. Also, you can consider it as a lower high. There's actually first entry long, and you only get a first entry long, but it has the EMA helping you push it down. There's enough room to scalp down, but I skipped it. Prices move down on this yellow down channel, and this is the same thing that I saw over here. So it makes a new low. It's a break of this yellow down channel. Makes one attempt down. Technically, here's the second entry short. You have a third entry short, then you have a fourth entry short. But what I liked, but I didn't take the trade, is it doesn't quite follow the rules. You are maybe at the top of the range. There is maybe a triple test or quadruple test, but the signal bar just wasn't quite there, so I had to skip it. I was tempted to take it, but I don't know how I would justify it other than hunch, which I can't quite, I guess, use, right? I'm not that I can't quite use, I just don't have enough confidence in my hunches yet to take this trade, because I need to see a little more of this happen. And I think this just have understanding the overall context and knowing it's a bearish day, I probably would have jumped on more trades like this. Ends up being, it would have worked. Consolidates, pushes up. Now, this is probably the first decisive push above the EMA since the beginning of the day. I mean, you could say, well, I would take that back, not the beginning of the day, but clearly the bearish bias has been pushing and the EMA really hasn't been helping all that much. So then it has this very strong push. Not only does it have this very strong push, it bounces and acts as support and pushes back up. So you have two clean legs up, comes down. I thought there was a triple test here, but even though it's a triple test, I just didn't really trust the setup yet because other than the triple test, which looks a little spindly, I don't know how much to trust this, but definitely there's a one attempt here up failed, a second attempt. So triple test or just a double test. It could be argued for maybe just a double test, so I didn't really know for sure yet. So left it alone. Price is sold off, bounces, and starts chopping sideways, and just even to this late in the day, your candles, signal bars, they're all really large, like 2, 3, 4 points large. So it just made trading, risk management a little tougher today. But also, this is kind of the same thing that I saw. The new low here, it's a first entry short, second entry short, breaks out of this orange up channel, pushes, and doesn't really quite make a new high, but it flushes down strongly. I like that. I like these type of setups where it moves one tick up and then reverses strongly. Unless you took it on the engulfing, but even the engulfing, it feels really risky. You definitely wouldn't want to take this trade after the close because it's first entry, second entry, third entry. You need something a little more confident. But again, I saw this in real time and I thought there was a trade here. But again, I wouldn't really know how to confidently explain it other than maybe a resistance across here. Maybe a one touch, two touch, a third triple test potentially. But, I don't know that I would have mentally been ready to take it. I probably would have tried to take it once it broke past this candle and below the EMA. Then prices push up. It falls really nicely into this yellow up channel. And I thought this was a really decent trade here. Unfortunately, it was really late in the day. You technically have a new high, first entry long, pullback, second entry long, then third entry long. But I counted it kind of like a second entry long because you don't really quite have a higher low, but you do have the bounce off this confirmed yellow up channel. So I like this trade, but I had to stop myself because it's kind of late in the day. This is a really large candle. This is a 17-point candle. So just, even trusting it is a little bit hard based solely on the risk management. Then pushes up and then kind of chops around, finally breaks. There's two legs down. You do have a higher low here. It's a new low for such a short, second inch short. And then you do have a higher low here above the EMA. Again, this candle is gigantic. This is a 18 tick candle. So it was just, I just saw a bunch of these all day, which made taking trades difficult because not only was the volatility coming into play, the candle sizes themselves were really huge. But if you were somehow to know or get a good sense of what's going on, and you were able to short way up here, you could have rode down a really large runner. Unfortunately, I wasn't able to. I was fortunate enough to get two trades out. Granted, the first one's iffy, definitely iffy, and then the second one was where was that second one? Right, first trades there. Let me check my notes. Second trade was a 957. Oh, right here. I didn't box it. So the first trade was more iffy. Second trade I felt more confident on, and then there was just other trades in here that probably would have been worth taking, and then other trades like the black arrow ones that I felt I had a hunch on, but I had to stop myself because I didn't quite follow the rules, and I don't want to start breaking the rules when I don't have enough experience understanding price action context yet. So it was a mentally exhausting day for sure because you get maybe one or two candles per minute on average because there's like 836, I think, bars that I saw. And just a 1 minute candle, you're going to get under 400. So you're like looking and you're just seeing things flash by you really quickly. Not that they all not that they all just gave you 2 bars every minute per se, because sometimes it was rapidly moving, but it was just seeing it, trying to be dialed in, knowing the context of the overall bearish bias, but looking for a clean, safe entry was definitely very exhausting today. So hopefully that was helpful.